Chancellor Jeremy Hunt confirmed a 2p cut in national insurance, which is worth around £450 a year for someone on an average salary. The cut was widely trailed in advance of the budget and will apply from the 6th of April. It's expected to cost the Treasury around £10 billion a year, and when we think about the savings for someone on £20,000, this will be an annual saving of £149 a year. With someone on an income of £30,000, it will be £349, and those earning £40,000 will save £549. A higher and additional rate taxpayer would save around £754. For those clients who are in retirement and are already accessing their pension, there's of course no national insurance in relation to a pension, so this change will make no difference to yourselves. Of course, thinking about tax in general, national insurance is only one part of a wider picture. This April will see another freeze in the personal allowance and the higher rate tax threshold, which the OBR says will see 1.1 million more people dragged into paying income tax and 800,000 people forced to pay higher rate tax as a result of incomes rising, but those allowances staying the same. This means that with this announcement, we can't really just look at national insurance savings in isolation. It's about the bigger picture of tax rates, tax bands, income levels, as well as national insurance, which makes up just one section of this. Jeremy Hunt also used the spring budget to announce the introduction of a new British ISA, which will come in the form of an extra £5,000 tax-free allowance to encourage UK retail investment. The existing ISA allowance is of course £20,000 per annum, and the new British ISA will appeal to those who are currently maxing out their ISA limits in the tax year, as this will provide scope for an additional £5,000 of tax-free savings. As always, we would say diversification across different asset types and different geographical locations is an important way of managing investment risk. However, the announcement from Hunt does signal that he wants to take every opportunity to use all types of savings and investment to boost the UK economic growth. And another announcement that Hunt made was looking at the threshold at which parents are charged for receiving child benefits. This is to rise from £50,000 to £60,000. The top of the taper at which benefits are withdrawn has also risen to £80,000. These thresholds had not previously changed since the policy was introduced by George Osborne in 2013, despite, of course, cost of living increasing. However, the Chancellor acknowledged in January that child benefit rules may be unfair and in need of wider reform. Currently, claimants who earn more than £50,000 lose some of their family's child benefits. However, a family where two parents jointly earn more than £50,000 still receive the full amount. Today's announcement means that the lower threshold rises to £60,000, while the point at which the benefit would be withdrawn completely will rise to £80,000. Child benefits are paid to families in the UK with children under the age of 16 or under 20 if they're still in full-time education or training. The budget also saw the usual attack on cigarettes, vapes and alcohol. We saw alcohol duty frozen, which had been due to end in August. The new tax on vaping products is to start in October 2026, following a consultation period. An existing tax on tobacco is to increase, essentially to create those financial initiatives to help people to give up smoking. Transport and energy is always a topic that comes into conversation. Fuel duty has been frozen again, with the 5p cut in fuel duty on petrol and diesel due to end later in this month to be extended for another year. We've also seen windfall tax announced on energy firms who were these were scheduled to finish in March 2028 and have been extended until 2029. We've also seen air passenger duty increase. This is the tax paid on business class tickets. The rest of the budget had lots of minor announcements. One that would be interesting for those people who have second properties would be that the higher rate of tax paid on profits from selling property has been cut from 28% to 24%. Tax breaks for owners of holiday let properties have also been announced that they'll be scrapped. During the budget, there's also an opportunity for the Office for Budget Responsibility to predict what the UK growth and the UK economy will look like. So there's a prediction that the UK economy will grow by 0.8% this year and 1.9% next year. Growth of 2% has been predicted for 2026, with 1.8% in 2027 and 1.7% in 2028. One thing both Chris and myself would always say here is these predictions are always useless, so it's a case of seeing what actually happens and how these figures change over time. Overall, there wasn't anything too exciting in the budget. We'll certainly from our end be looking at the British ISA and seeing how that would be relevant for our clients and seeing how we might implement that into our investment philosophy, and more information will be presented about that in the future when we get into the nitty-gritty of the rules and understand how it could work and complement our existing investments and investment strategy. As always, if any of you have any specific questions about the budget or anything else, please do not hesitate to get in touch, and we look forward to catching up with you again shortly.